protecting Main Street from Wall Street. It's Chris Hoffman with Money Unleashed.
How much money do you put into your checking account from work on a month-to-month basis? It has a high probability that with your investable assets, we can replace that paycheck.
It's time to put you back in control of your money.
You've worked for 30, 35 years. It's time for you to not stress. It's time for you to enjoy and live the retirement you want to live.
It's Money Unleashed with Chris Hoffman.
This is Money Unleashed with Chris Hoffman at the Hoffman Financial Group, proud partner of the Georgia Bulldogs and the team ready to help you build your financial dynasty. Get started with us today at 404-341-6767 or head on over to unleashyourmoney.com to schedule that time to meet with us. Now, it's hard to believe that yet another year has come and it's almost gone. And that means it's probably a good time to make sure that we're closing things out properly and getting a head start on 2025 while we're at it. Kiplinger believes that we are in the best time for tax planning, Chris, and I think that we could argue it's always a good time to do that kind of thing. But the first item on their end-of-year list is tax loss harvesting. And Chris, I know we haven't talked a lot about that here on the show, but what advantages does that offer?
Yeah, it should be an annual event for every client. A lot of people are still holding on to some losses from 2008, believe it or not. So if you invested in, let's say, an index fund after 2009, 2010, and you've held it, a lot of you have substantial capital gains that you've built up, and you're looking at it saying, well, if I sell this, I'm going to get hit with a big tax bill. Well, have you looked back to see if you had any losses in the past? And let me use a more recent example, 2022. So if some of you jumped into the market in late 2021 and saw a pullback in your equities portfolio in 2022, and sold some of those positions, you may be having a carry forward loss. So one of the things we analyze with every client is in their taxable accounts, how much capital gains do we have? Do we have any capital losses from previous years to offset any and all tax burdens? And that allows you to kind of rebalance your portfolio when the market's up and take some risk potentially off the table, but not damage yourself from a tax standpoint. Very powerful, and we do it annually with our clients.
A couple of other tax-related items that we're always mindful of here on the show, assessing your contribution level to your pre-tax accounts, but also Roth conversions, which need to be done by December 31st, by the way. Those can be particularly powerful for tax planning and retirement as well, can't they?
Yeah, so there's a laundry list of tax strategies that I don't think a lot of folks understand. When you build up your portfolio and you've got $500,000 or $1 million, you've accumulated it over time in certain buckets, pre-tax, tax-free, or taxable. And then there are different ways of massaging your portfolio, not from a mix of investments, but a mix of how the government and the IRS looks at them and whether they are tax favorable for you or really a tax burden. So let me give you an example. Cash value life insurance. You can actually invest in life insurance. It really should be called death insurance. It's insuring your family and your survivors in the eventuality that we all pass away to make sure that they don't carry a financial burden. It's a tax-free death benefit. But you can also use cash value life insurance to fund tax-free income streams during your retirement life. So there are some rules around it. Work with a professional on setting it up properly, but you can put money in on an annual basis, wait for a period of time, and then start drawing out a tax-free income stream. Things like that need to be discussed. And if you're not meeting with your financial advisory team and having tax planning discussions, you are missing out on potentially walling off the government and the IRS from taking large chunks of your hard-earned money. We get taxed a ton in our lifetime. We get taxed on our income checks, Social Security's pulled out. When we go to the grocery store, there's a tax. When we go to the gas station, there's a tax. $1 gets taxed multiple times in our lifetime. When you reach retirement, folks, the name of the game is, I don't want my money taxed anymore. Let me off the hook, government. Well, they're not going to willingly let you off the hook. We need to plan around it and build the right tax strategies in your financial plan to shield you from the dreaded word income tax. That's the one that'll kill you. That's not a good tax. We want capital gains taxes. We want tax-free income, either through cash value life insurance or a Roth conversion. And if we have to pay some tax to put us in that position, it may serve you best to pay some of that up front to protect you throughout your retirement from being overly taxed.
There's a very simple reason, I think, that laundry list that may include some tax strategies that some folks, the average person, I would say, hasn't heard of. And that's because the tax code in and of itself, Chris, might take us a lifetime to digest, let alone understand.
Yeah, so that's a big issue. The tax structure in the U.S. has been stacked one tax code on top of another tax code on top of another tax code. Nobody has ever stripped it down and said, hey, if we started with a clean sheet of paper, how would we tax income? How would we tax capital gains? How much tax-free investing can you do? Because keep in mind, Roth 401ks are relatively new.
Right.
And a lot of times it's overlooked. We want to avoid taxes when we're working. I would argue you don't want to avoid taxes when you're working, at least 100% of it, but it's an addiction. We want more money in our pocket, right? We don't want to give the government income tax, but you're working and you are generating income. And that's when you should pay income tax. I believe when you retire, your objective should be to pay no income tax and shield yourself away from worrying about, if tax rates change, how does that impact my standard of living? Will I run out of money? That should never be the number one fear in retirement. Running out of money? The number one fear in retirement should be, hey, can I travel and stay healthy and young enough to do what I want to do and travel the world or enjoy my favorite hobbies, golf or what have you? That should be, and it shouldn't be a fear, it should be an excitement.
Yeah.
Right? We want to retire and be excited. So we've got to check these monetary boxes, folks, and get you a plan that includes tax strategies to where you don't turn over control of your financial life to the IRS. That sounds scary because that is a big group and they're very powerful. And the last thing we want to do is mess with them. So let's decouple ourselves from it in a legal way and pay the minimum tax required by law. And let's decouple your retirement from paying too much taxes. That would be my objective.
And let's have those tax discussions now when you have the opportunity to put that plan together. 404-341-6767 is the phone number, or sign up for a time to speak with Chris and his team at the Hoffman Financial Group over at unleashyourmoney.com. Now, this end-of-year list from Kiplinger also suggests a few basic but important steps to take. Year-end typically comes with varying amounts of reflection on all things in life, but it can be a good time to reassess important things like our risk tolerance based on what we've seen over the course of the year. That's something to monitor when you're meeting with your financial advisor throughout the year, isn't it?
Yeah, it is. And you've got a couple of items that you can take advantage of. So people typically with their required minimum distributions when you turn 73 years old, they pick one day of the year to have their RMDs sent. And you get locked into that approach. So let's take a look at this year, right? The stock market has gone straight up, been a great year so far. If you had pulled your required minimum distributions out of your stock portfolio in the first quarter or the second quarter, that money now has not been able to grow. So do you have a proper balance of your portfolio where if the market's going up, you can hold on to those stocks and pull out your RMDs from them toward the end of the year or basically the last week of the year? Now, if you're saying, well, Chris, I didn't want to risk the stock market pulling back and me having to sell stocks at a depressed price, well, that tells me you haven't built a protection rotation strategy into your portfolio. Because if that becomes the case, then you should be taking RMDs from the protected side of your portfolio or the side of your portfolio that has a lower standard deviation or measure of financial risk. So that's RMDs. The other thing you can do with your RMDs is you can make charitable contributions. You can literally take some of your stock. Let's say you've got NVIDIA, all right, and you got 100 shares of NVIDIA and it's exploded. You can donate a certain amount of shares of NVIDIA to a charity and you don't pay taxes on it. So if you have a charity or a church or any organization that allows for tax-free contributions, that can be used as a strategy as well. So all of that needs to be discussed and planned around year over year. But I do not like it when Wall Street just locks clients into the same routine every year. Okay, this client wants to take his RMD from his stock portfolio on December 15th, and we automatically send it. Not good. Those should be discussions during the course of the year. And that's, again, why we meet with our clients quarterly, is to make sure that we're touching base and analyzing the portfolio and taking a look at opportunities for when we want to take the distributions. That's all extremely important. We can do that over Zoom meetings for our clients that have, worked with us for years and years and years and years and years. Or if you're a new client, that face-to-face, putting eyeball on eyeball is extremely important, I believe. But quarterly meetings are a mandatory item at Hoffman Financial Group, meaning it's mandatory for us to send you an invitation quarterly in a text that says, click on here, open our calendar, and schedule your next quarterly meeting. You could ignore it, and you'll get another one the next quarter, or you can take us up on meeting quarterly to stay on top of your financial plan. And we love doing it because it makes life smoother, easier, and I believe it allows us to manage your portfolio at a much higher level.
It's important to stay on top of this. And one other item on the list worth consideration here at year's end is staying the course and avoiding reacting emotionally to the election. I feel like that's worth repeating. I know we opened the show with it. I'm sure it'll come back around again as we continue to do this thing, but it's important for people to know this.
Yeah, so anybody who voted for Trump is getting all excited about, I want to invest more, I want to take more risk, et cetera, et cetera. Anybody that voted for Harris is probably saying, oh, I fear this and fear that, and I want to pull back. Well, one of you is wrong. So don't fear and don't manage your portfolio around who the president is. There is a ton of economic data that is more impactful in your financial lifetime than who the president is. I'm not discounting the fact that Harris versus Trump have different areas of opportunity that we will take advantage of, but you should not fear a president, nor should you get too excited about what a president may or may not bring to the table economically.
Just some things for you to keep in mind here as we close out the year. And give us a call. Book that time to get your portfolio x-ray. It's a complimentary service. It's really the best way to get started, and there's no cost whatsoever for this. It's an extremely informational and valuable report they'll generate for you. It'll size up your savings and create that full and comprehensive financial plan designed to get you to and through retirement. That's that next step. But it all starts with that portfolio x-ray. So let's get it going. It's a complimentary service, no cost whatsoever. Again, 404-341-6767. That's 404-341-6767. Or sign up online at unleashyourmoney.com. Chris Hoffman is an investment advisor representative of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.